Hello everyone and welcome to the afternoon session of the live stream. I'll be with you for the next, not quite 2.5 hours until the closing bell rings at 2 o'clock, 4 o'clock Eastern. It is 1:41 right now. Jerome Powell's testimony before the House Financial Services Committee has concluded. I didn't see anything really terribly new come out of that. Right now, the Dow in the cash markets is down 82, then NDX is down 46, the composite's down 44, SPX is down 14.5, which is the S&P, and the Russell's down almost 11. Right now, the Russell is the weakest of the indices, not by a whole lot. You know, the Dow is definitely the strongest. It's only down 0.34, so about 1/3 of 1%. This is interesting. VIX is up almost 13%. So volatility on S&P options has increased to 13%, just shy of 18. Volatility on the Russell, which is RVX here, is up only 8. If we take a quick look, and we've been looking at put-call ratio the last couple of days. You'd expect the diamonds to be the least bearish. And indeed, truly they are. 0.4 is a bullish read. So again, put-call ratio is the number of puts divided by the number of calls. And if that number is above 1, it's considered bearish because there's more calls than puts. If that number is below 0.75, that is considered bullish, and anything between 0.75 and 1 is effectively neutral. So what this is saying is that longer term, as far as and these are traders making bets, they're putting their money where their mouth is. They're buying calls over puts. They're transacting in more calls than puts. That's overall a bullish sentiment for that particular underlying symbol. If we go to probably the opposite end of the spectrum, the Qs have been bearish all day. Were bearish yesterday. This number was above 3. It's at 2.272 now. The IWM, which is the ETF that tracks the Russell 2000, is 1.711, so not quite as bearish, but still bearish. And then with volatility being so high on the S&P, you'd expect the spiders to be the most bearish, but I wouldn't be surprised if we find that to not be the case when these numbers come up. Only 1.1. Now, an interesting disparity that I saw is the XLK is the sector spider for the technology industry. Last time we looked, and it still is, 0.65 just about. That's borderline bullish to neutral. But the Qs are bearish. And if I were to pull up a chart and do a comparison, which I did, of the Qs, which are the red and green candles, versus the purple line is the XLK comparison. This is a 4-minute chart. We're seeing that correlation is pretty close to 1. At noon yesterday, it dropped to 0.1, which is interesting. But as far as today is concerned, well, no, this was noon on Friday. I'm sorry. As far as today is concerned, it has not dropped below just a little bit below 0.8. Still positive correlation, but not as closely correlated. I don't know if this means a pairs trade, long XLK, short Qs, because we're seeing XLK pulling a little bit ahead of the Qs, but then we also see it, being below here. So long term, I don't think that really tells us anything. If I pull up the day chart, I find that, other than back here in like, what is that, December or so of 2007, even October, November, there was a bigger delta, but it's been hugging pretty closely ever since the beginning of the new year. So yeah, correlation was close to 0. It was actually negative, like negative 0.1, negative 0.04. That was probably late October. So if I'm going to believe one, it's going to be the put call on the Qs, just because of the sheer volume of options that are being transacted on that particular underlying symbol. Now if we take a look at because there are options on indexes, 1.6 on the NDX, so on the index itself. On the Dow Jones, there are no options on that. There are on the SPX. .5, so a little bit more bearish than the 1.1 that we were seeing on SPY. About a little over a million options contracts have been transacted today on the SPX. About 12,000 on the NDX. So certainly not the kind of volume, but 1.5 not very far off from 1.636. I don't remember if there are options on the RUT. Apparently not. No, there are. Okay. The Russell, so big difference here. 2.6 on the index itself, 41,000 options. On the IWM, 300,000 options. So much more liquidity in the IWM than the options on the Russell. 1.7 versus what we just see, 2.2. 2.6. Let's take a look at how the trendsetters are doing. Biogen, BIIB. I believe that's what that is. Hold on. I know most tickers, but not all. I shouldn't say most. That'd be too much of a, that's too boastful. I know quite a few. Biogen up today. Let's actually sort. So winners today: Chipotle, Intel, Biogen, Apple, and Goldman Sachs. At the bottom of the list, Disney down 4%, Alibaba, Alphabet, Tesla, Walmart, Facebook, McDonald's, Costco, IBM. Also Cisco, Amazon, Coca-Cola, Microsoft, PayPal, Intuitive Surgical, and Netflix. According to this strength trend indicator, Biogen is in a downtrend. Let's see if we agree with that statement. Yep. It actually would probably be a little bit better if you looked at it here. So Biogen hasn't been having a good month at all. But looks like a little bit of a bottom here. Potentially. So from this perspective, it is stronger. Might be one to play for a bounce. Where was I? Hold on. Apple news that came out today. 3 new additions to the iPhone family. I read the headline. I know a larger iPhone 10, like a big screen iPhone 10. Apple launching medical clinics for employees. I don't know how much that's moving the stock, other than if it's a cost savings, statement, which it very well could be. So not a lot of detail. So we do know, one with a screen that's the largest available, but we don't know what model that's going to be. A lower end model than the 10, which has some of the features of the 10, like facial recognition. And then just says a new phone the same size as the iPhone 10, which has turned in disappointing sales. New over-the-ear headphones, new AirPod headphones, which, that's kind of old news. A wireless charging mat. Here's an interesting anecdote. Here's a story from The Guardian. So if you know the musician Moby, which I like his stuff, I really like Moby. Company executives handed him the first iPod, told him that Steve Jobs wanted you to have this, and Moby said, "You do know at some point this is going to have a camera and a phone attached to it," and they laughed at me and said that could never happen. That is interessante. Cisco Systems. Having a decent run. Gap on earnings on the 15th. Been in an uptrend ever since. And Walmart, which has a downturn showing up on this strength indicator when earnings came out. Disappointment with regards to, if you remember, disappointment in terms of some of the discounting was hitting gross margins, but also disappointing e-commerce sales. So obviously the concern with Walmart is, can they compete with Amazon? I think they can. But that news was not welcomed by Walmart investors. Back to the futures. Not back to the future. Back to the futures. Dow futures catching a little bit of a bid here. Or were now kind of showing some weakness. NASDAQ also getting hit with some selling. The S&P, same story. You don't expect there to be a big disparity. Russell futures are the worst performing of the index futures right now. Down 92, just down just about 1%. If we look at some of the other futures that I track, the Australian dollar is one I would be paying attention to. The Australian dollar, strength of the Australian dollar is levered to commodities prices. Canadian dollar to oil, Australian to copper, gold, industrial metals as well. Down 0.5%. British pound sterling futures down 0.25%. Euro futures are down 0.5%, just about. The Japanese yen showing some softness today. It had been strong in the wake of a lot of the index volatility, the stock equities volatility that we've been seeing. Crude futures down 1.4%. I'll fix this in a minute. Gold we already talked about. Copper down 1.3%. And the futures on the 10-year note are down 0.4%. So now the question is, what do we focus on for the remainder of the day? Volatility as measured by the average true range of the Russell futures are down a little bit, but I suspect that we're not really going to see that much of a difference. I mean, yeah, on the rise for the S&P, somewhat on the rise for the NASDAQ 100, and probably on the rise here for the Dow futures as well. But given that the Dow futures are the one that we've been following most closely, and that I probably ought to clean up some of these drawings here. Now look how one second. If you're not a believer in leaving old drawings on your chart, let me persuade you otherwise, because this one has been on the chart for a couple of days, and look where the NASDAQ futures traded down to. Now, not to the tick. They rarely ever trade right down to the tick. But that's one that's held. Now, this one has been violated. It was touched here. It's been violated here. It did act as resistance here, and then the NASDAQ retreated from that level. At this point, I would say of these two levels, the top one's probably the least useful. So we don't need it on there crowding our chart. I'd say that this one here is still useful. I'm not so sure about this one here. And this one, obviously, this is still a solid line because this has held. This level has held 3 times as resistance. So as far as right now, honestly, what we're looking at is a trade down here. And there's an example of why you take profits when you can. I was just about to hit flatten and I didn't. But I do believe once this resolves itself, because this is going to trade up, it's going to be another play to the downside to this level of support. Facebook getting kind of whacked today. Not surprising. Down 223 at this point. So this may be an opportunity for me to buy back my short calls on the VWO, but that depends on, you know, what do I think the immediate future holds. At this point, it almost seems like the wisest choice would be to, I should say almost, a wise choice might be to roll this to a lower strike and basically instead of being net long VWO options, be net short call options, which would be a very bullish play. I think it's premature for that. Just like I think it's still premature to be overall bearish on equities because the bull market isn't dead yet. It's not even hibernating. And the problem is reversals don't happen instantly. I mean, yeah, they can on individual issues which have like a bad earnings report or something, or a really good earnings report. But when you're talking about indices, which are comprised of, tens if not hundreds of companies, sentiment and economic conditions and economic data and things like that take a while to work their way into the pricing of the market. Plus, the other aspect to it is dollar strength. What role is dollar strength going to play in emerging markets, which is what BWO is. Now, I wrote a piece on Seeking Alpha where I basically talked about this, and what was interesting is that when you see a correlation of dollar to yields has an impact on, or seems to have an impact on, the performance of emerging markets over time. So if you want to read that piece, the link to my profile on Seeking Alpha is in the description of this channel. But as far as today is concerned, the dollar and the Treasury yield on the 10-year note seem to be correlated. I want to take a look at the sector spiders. Alright, before we do that though, seeing another bearish move in NASDAQ futures. Let that be a lesson. Maybe I just shouldn't play futures in the afternoon. Because for whatever reason, that just doesn't seem to pan out. The reality is, if the trend is your friend, this is telling you to go short. Now, before we looked at sector spiders, I want to look at indices. So the Dow was the one that, remember, was below the 61.8 retracement. It broke above. It's now trading back down towards that level. You would expect that to be a level of support. NASDAQ 100 trading right at, was within striking distance of regaining the high, the all-time high, and just given market weakness today, has backed off from that substantially. S&P doing the same dance as the Dow. Russell is, as evidence of its weakness, relative weakness, trading back down below its 61.8 Fibonacci retracement level. So it would be worthwhile keeping an eye on that today. if we zoom out on the NASDAQ futures while that's in front of me, you know, clearly bearish here. If we look at the 4-hour has now, and this is confirmed. So this 4-hour bar closed barely below zero. This is confirming our day chart is showing momentum weakening. The week is showing still bearish, but with a bullish tilt. And something that has me concerned about all of the cash markets across the board is when you look at the monthly chart. And today is the second to last. Today is the penultimate trading day, which means second to last. The NASDAQ is not forming a bullish crossover. But if you look at, the S&P, the Dow, the Russell, if it wants to draw, has been forming a bearish stochastic crossover on the monthly chart for a few days now, quite some time. Wow, I just have a knack for picking the worst possible trades in the afternoon. The worst possible time to get in. Well, I'm not doing that anymore. I've shorted it 3 times, and 3 times I've been wrong. I didn't like what I was seeing at this moving average here. It was, which is doing right now, is showing this weakness and backing off of that average. The other aspect to it also is I caught out of the corner of my eye looking at the 4-minute stochastic chart, and this is about to make a crossover, but it hasn't actually done it yet. So until I get confirmation, I don't want to get my face ripped off. I've already given back too much as it is. And seeing the average true range come in the way it is, also that's indicative of chop. So unless I want to get caught in the buzzsaw just watching this just chop and slop back and forth, I don't want to be in the middle of that. Basically, it's been unsuccessfully testing the 27 period MA. The this is the 9 period. The 27 has been a little squishy. Okay, XLY, consumer discretionary. I'm going to mark on these charts what the current put-call ratio is. Okay, I told you to change the text. Okay. XLV, healthcare. Said yes. 1.882. Utilities. Now the pattern on utilities is very different from the rest of the overall market. It's showing a failure to retrace anywhere near what the other sectors have. That may suggest that we are not, I mean, if you take that by itself, would suggest that we're not in the late stage of an economic cycle. Trying to find a diagram which really shows a good representation. We've seen a late bull market, which is probably where we are. Basic industry. Well, industrials are not doing well, so we're past that point. You know, energy and precious metals, presumably miners. If we are cresting here, then that means that consumer discretionary and healthcare should be doing well. Or not discretionary, staples should be doing well here. Utilities wouldn't kick in until here. which, probably higher rates than what we have today. If we look at the economic cycle from the standpoint of how do you identify it, late upswing phase, I think that this definitely characterizes what we're looking at. Bond yields are rising, the short rates are rising more quickly than, the yield curve is flattening. Short rates are rising more strongly than long rates are. Commodities have been rising strongly, like a copper, like a gold. Do we have a boom mentality? Yes, we have ever since November of 2016. Inflation's gradually picking up. We're finally seeing wage inflation. We're talking about the Fed's talking about inflation itself, overall inflation, much more seriously than in the past. Policy is becoming restrictive. Well, not fiscal policy, but monetary policy has that potential. I mean, in general, I think I can say as we look at the sectors, they really don't, the way that they're behaving really isn't following this model. Financials should be doing well earlier in the cycle. Which they had very early in the recovery after they got kind of put the worst behind them. According to this, consumer staples should be coming upon doing fairly well. But if you compare it to the major indices, it's really lagging that. I don't want to call it a recovery, but recovery from the volatility, recent volatility, definitely. According to this, and here's what's weird, is the XLK is actually above its recent highs. The Qs are not there yet. The index is not there yet. Technology, according to this, should be doing well really between early and middle bull cycle. Not that it hasn't. I mean, it's been doing very well. But when do you expect that to trail off? the rally failing in the NASDAQ 100 futures. That was a nice little run. Industrials. Options traders betting on basically betting that we're past middle recovery. I mean, that's what that means. This is basic industry. Of course, we're getting a lot of conflicting signals here. I mean, and this is not a hard science. You know, trying to explain why why people are so bearish on industrials, but not on XLI, but not XLK, which is technology. You know. And financials being among, you know, the most bullish right now. You know, financials, it should have their day here. So that's the view, as muddied as it may be, of the sectors. I'm glad I didn't short it here. Making another run at that 27 period MA, which is basically the middle of our Bollinger Bands. Courtesy of Bloomberg Markets, 5 charts to help you understand Tuesday's U.S. economic data, because there was a bunch that came out today. Thinking this morning's Traders Espresso, I mentioned consumer sentiment wasn't out yet. Housing price index, trade deficit, and inventories, wholesale inventories. So first piece, capital spending slowing. So 2 consecutive declines since the middle of 2016. Here and here. Next up, consumer sentiment. So higher wages, low unemployment. We talked about housing price gains. So biggest year since 2014. Looks like June of 2014. So wider trade deficit, so more imports than exports. Widest level since 2008. I mean, there's always a gap, we're net importers. So what I'm reading is attributing some of that to higher oil prices. The deficit, that is, the gap between the imports and the exports. And then the final piece of data is one I talked about, which is wholesale inventories increasing. And it looks like not just wholesalers, but also month over month in the retailers as well. 0.7 versus 0.8. Now I do know that the wholesale inventory, that was wider than expected because that was expected to be, I want to say like 0.3. Point 0.3 was the expectation that came in at 0.7. I'm not seeing retail inventories here, but that number must have come out somewhere. So there you have it, folks. So while we were pondering the data, we were missing some bearish action in the NASDAQ futures. Although I might have been better off not touching that one. That was almost a little too schizophrenic. Now, as futures get ready to test this level here, I want you to see where I've drawn some levels of support. This is the one I just drew. This is kind of where we are right now. Here and here. You could argue this one. Well, actually, no, because that's just an extension of this. If you extend that out to the left, you'll see so it's important to prepare for some target levels if we get this breakthrough. Because if you get that breakthrough, it can happen pretty fast. Ah. Now we got to close below that trend line. Which is a good sign. That assumes that you draw the trend line accurately. I mean, technically if I were to adjust it to account for this, don't know where the handle is, but that's not. So we're seeing lower lows, lower highs, lower lows. So we're seeing the buying get batted down. We just saw that surge up, and it quickly, that did not sustain. That was quickly batted down by the bears. That might have been a good spot to add another, short contract. I didn't. At this point, I'm not looking to take a tremendous amount of risk. I'm just trying to capitalize on what's in front of me. That's a good place to go flat. Given uncertainty about whether or not it is going to break through here. Now, it looks like the momentum is there. I gave up a few ticks to get out. Which in a minute here I'll probably wish I hadn't, because if it breaks through, then that means I should have stayed in it. But it is 27 after 3, so we've got about 33 minutes left in the trading day. And this seems to be the tone for the remainder of the session. We've got deteriorating technicals. We've got increasing average true range, which, again, that's kind of my proxy for volatility. You know, if I want to, I can really plot implied vol on here. Now, one thing I want to warn everyone about is that we are seeing, this has been bottoming for some time. It's made some attempts to cross over. It looks like it may be successful at doing so now. It's going to go back up here and probably test not only the 9 but the 27. And yeah, we've got confirmation now because that stochastic, it broke through. So you can see the proximity of the 27 period moving average to this downward trend line that I just drew. That looks like that'll be a pretty solid point of resistance. Now, if some buying momentum comes in and it breaks through that, then the next level that you would look at would be right about here. You've got the 243 might as well call it just the 250. Let's just say it that. And the what is that? 81. Now, implied volatility is coming in because of the upward price action. However, this little crook here in ATR is telling us that I think that the bullish trend's weakening, which you're kind of seeing here. It stopped. Right now, it's failing the test against this 9-period moving average. And I don't know if I'm going to make any more bets today myself, because I'm pretty happy with where I'm sitting on the day. I'm not happy with the efficiency of my trading. I basically had to do quite a few more trades to get back to where I was before the lunch break. But, I'm not going to do any more trading to try and get transaction costs back. That's a mistake. I don't own, shares in my broker, so I don't need to line their pockets. Or the futures exchange either, so. About 25 minutes left to the closing bell. And almost as quickly as it happened, that bull run is reversing. It did manage to close above the trend line, but now it's heading back to it, but got stopped cold at the trend line. But that's only a temporary situation. Or are we looking for something down around this level here? Off screen, I'm looking at put call ratios, 0.42 on the DIA on the diamonds. .14 on spiders. 2.65 on the Qs. .65 on the Russell, which is the IWM. That's the ticker for the ETF. XLK has now gone bearish. It's 1.27. So that was, before, what was it, 0.6, 0.7-ish, somewhere in that neighborhood late in the day. It's the put call ratio has spiked above 1, above 1.25 actually. Um, 0.736 is what it was when I looked at it. What was that, 45 minutes ago? So correlation, This is the daily. Let's look at the like a 15-minute, because we did see NASDAQ is futures are dropping. 4-minute chart doesn't really tell a story. The 15-minute chart does. Very low correlation. That was at 9 o'clock today, though. So, I mean, it's not like this happened here. If we look at the hour chart, we do see, this dip down to 0.8, like, kind of the 10:30 time frame increasing, kind of correlating more strongly. And right now, just seeing a lot of push-pull right here around this pivot point. I think yeah, that's the first point of support. This was the pivot point. This was the middle of yesterday's range. So I would not take a trade here. It'll be interesting to see what it does if it trades up there. But not looking like that's really going to happen. Emerging markets, the VWO I just looked at, it's down $1.24. And just as quickly as it started going down, it's ripping back up again. So, this is, the last 15 minutes are difficult. Even when you think you see a true trend, it can be very choppy. If I absolutely had to make a trade, I mean, this doesn't give you a lot of room. It's either gonna hit here and it's gonna look up here and fail, or it's gonna blow through it and then hit this level. And right now it looks like that's what it's trying to do. It's not doing a very good job of it. So what is the market doing? What is it trying to do, and how good a job is it doing? Right now it was moving up, trying to shoot up to this level. It looked like that's what it's trying to do. Right now it's not doing a very good job of it. Because it keeps, the bears are defending this level right now. And now they just got a break. So if you were quick enough to catch that, you might have gotten a little bit of profit here. But just as quick as the market gives it to you, it takes it away. Just because you happen to find a pile of cash and grab it doesn't mean you're going to get to keep it. Doesn't mean that somebody isn't going to hit you over the head with a sock full of quarters and take it from you. So that is now a tested and confirmed, for now, level of resistance. Nine minutes, 35 seconds to go. Sorry, 8 minutes, 30 seconds to go. So we're now, besides what we're seeing on that other chart, we're seeing weakness here. We're seeing, on the 1 minute chart, stochastic crossover to the downside, bearish, weakening momentum here on the 4 minute chart, bearish, but strengthening from this perspective, although now I would not be surprised if this starts to paint a brighter red. The bright red is, bright green means getting further away from zero. Faded green, faded red means getting closer to zero. So you see how that just changed from, kind of a brick red to a bright red. Been a while since I looked at the indices. They just caught my eye. Dow down 220, which is 85 basis points. The Russell's down 1.1%. The composite, the NDX, and the S&P are all down just shy of 1%. VIX is up 18%. 18.5%. So volatility is coming back into this market. Volatility on the Russell, 14.5. So not quite as aggressive. The yield on the 10-year is now 2.908. 1 and almost 3/4% higher. The dollar index is up 0.6%. NASDAQ futures just broke again below that trend line. Now pushing our Bollinger Band out. A lot of volume coming in here. Facebook's getting whacked. Not surprising, seeing where the indices are, as well as the NASDAQ 100 itself. Down $3.16 to 181.75. Sellers firmly in command, with a minute 18 seconds left before the regular session ends. And right now, just tested that level. VIX now up almost 20%. So anybody who was short volatility is getting pretty well smacked right now. now we're seeing some very significant buying volume come in. You know, I missed the bell. I had my sound down, but the closing bell rang a minute and 20 seconds ago. So looking like these numbers are settling out here. So Dow Jones down over 300. It was 250 not even 5 minutes ago. The NASDAQ 100 down 89 almost. The NASDAQ Composite down 91. S&P down 35, and the Russell down 22, almost 23. In terms of percentages, Russell was the biggest loser today, down 1.46. The least weak was the Dow, down 1.17%. Volatility is spiked up almost 20% today on the S&P. Volatility on the small and mid caps, trailing, but still up 15%. Yield on the 10-year, the index for the 10-year yield up 1.7, dollar index up 0.6, gold down 1%, crude down 1.6%. These are the futures I'm looking at. 10-year Treasury futures down 0.34%, which you'd expect if the yield's up. You expect the prices to be down. Every single one of the 11 S&P sectors was down today. Real estate was the worst, down 2.15%. Consumer discretionary was next, down 2.11%. Telecom down 1.84%. Middle of the road, materials and consumer staples. Where is information technology? Information technology only down 0.95%. So in terms of like the S&P itself was down 1.27. Technology amongst the S&P sectors was the least weak. Only ahead barely was financials. Now you'd expect some strength in financials because of the reason why the market's getting derailed is the prospect of rising yields. Rising rates help banks. That is if they have the courage to lend. Any banks, JP Morgan, for example, Goldman Sachs would say, based on what happened today, their trading profits will be up. I'm sure a lot of trading happened today. So this is one for the history books. Not even to Wednesday yet, and the bullish 2-day streak has been snapped. If we look at the other futures, Australian dollar futures down, which is the same picture we saw before. British pound futures down by more than they were when we looked. The euro futures are down. Japanese yen futures are down. We already talked about crude. We already talked about the S&P. We already talked about gold. The only other one to talk about is copper, and that one's down to 1.3%, copper futures. What I don't track a lot is soft commodity futures. Soft commodities bucking today's trend. Natural gas too. Natural gas not up a lot, 0.2%. But soybean futures up, corn futures up, wheat futures up, Bitcoin was up. That's not a soft commodity, but it's interesting that Bitcoin is up. I have a hard time figuring out what Bitcoin is correlated to. At first it seemed like if Bitcoin was down, it was because the markets were down. Like that's a referendum on risk. But, with Bitcoin being up today, you can't really make that statement. Is it correlated to the dollar? Is it inversely correlated to gold? What is it? Still a mystery. But with that, I'm going to shut up now and let you all go. It's been a pleasure, and we'll see you all tomorrow. Thanks for checking in.